No secret to those of us here in the New York area that a runway at Newark Airport has been closed for repairs, and the airport has suffered, shall we say, some problems. And while that may bother you, the traveler, your next guest, actually sees a buying opportunity from this and more. Joining us is Tom Kozlik. He is head of public policy and municipal strategies at Hilltop Securities. Do not worry, Tom. We will not talk about rodent tracks or anything else with you. You are safe. But as a frequent flyer or hopeful flyer through Newark Airport and other airports, there's been a lot of problems. Are those problems creating opportunities?
Well, first of all, it's good to be back and talking to you again, Brian. Thanks very much.
You're welcome.
There is a very extraordinary opportunity in the municipal bond market right now. Back in the middle of April, that window opened up substantially. It's closed a little bit since then, but there's still an opportunity for folks to take advantage of generationally attractive yields right now. And I liken this to the situation that we saw at the end of 23 going into 24. There were all kinds of investors I was talking to at the beginning of 2024 who missed that opportunity at the end of 23. Now it's still here, and investors need to take advantage.
Yeah, and the one good thing I think about the last few years, and we can argue about debt, we can argue about deficits, and that's a separate conversation, but there has been and is a lot of spending on infrastructure. So it's nice that when things get better than when they get worse. How much money can we make off this?
So on top of that, Brian, what I would add is I'd say about 2 years ago is probably the strongest level that I've seen municipal credit really ever. But a lot of that had to do with the federal aid that we saw come through in 2021. There was a little bit of infrastructure spending just after that, but a lot of the substantial positive momentum for credit happened in 2021. That's just rolling off. So we are talking to investors about being selective, but credit is still very, very strong in most sectors.
Yeah, and our graphic also showed opportunities, what we call higher education. So are you talking about buying college debt?
So that is actually one of the sectors that has been having some structural issues for several years now. So we actually have a negative outlook on public and private higher education, but that doesn't mean you stay away from higher education. It just means you need to be more selective in that sector.
Okay, what does that mean, selective? What am I buying?
You're looking at situations where probably the larger organizations, the larger entities that have a lot of demand and also that are probably a little more selective.
Yeah, I mean, it is interesting. How do you know what schools? Here's the reality, Tom. Not every college that exists today is going to exist in 5 years, and they shouldn't. There's just too many colleges that aren't providing the value for the money. How do you know where to invest? How do you know where to look?
Well, so I would also add to that there are other sectors like the K through 12 sector that traditionally had, and like the higher education sector for decades, these are sectors that didn't really have as many credit issues, but now we're talking to investors about being more selective because of what's happening with enrollment, because of what's happening with other demographic trends.